Mid-Cap Radar on CNBC TV18. As promised, the management of Aan Exchange is with us today. Earlier this month, the company won an order worth 300 crore rupee from Indian Oil for a project in Haryana. Note that this project is expected to be commissioned over the next year and a half. Aankur Patni, who is the ED at Aan Exchange, is joining us now to discuss this order and the business outlook going forward as well. Mr. Patni, good afternoon. Thank you so much for joining us. Well, with this order, can you give us some sense what kind of order book will it take the company to, and how much will it contribute to your financials in terms of margin? Is it a margin accretive project for you?
The margins from this project are expected to be in line with what you would generally see from our engineering order book. So it would keep the margins at similar levels. The order book size after this order would be close to around 3,000 crores. We declared 2,800 crores as our order book at the end of the second quarter. So there has been some further additions to that.
On average, what is the quarterly run rate or accretion to your order book? What's the kind of order inflows you typically see, and has there been a step up in that, in the quarterly order inflows?
Yes, as I mentioned, end of the second quarter,
you were 2,800.
We were 2,800. As of now, we would be closer to 3,000 crores. That's after whatever executions have taken place during this particular quarter. So there has been an uptick in the order intake.
No, I meant, sir, Mr. Patni, what I was trying to get at, what is the average quantum of order inflows you typically see in the quarter? Is this your only order win in the current quarter? Has there been more? What has been the total order inflows in this quarter? And how would it compare with the average of the last couple of orders?
No, this has not been the only order win. We have definitely got more orders. Typically, during the course of the year, we would end up getting somewhere around 600 to 800 crores. If we go by past trend lines, the last year had been better. We were seeing more than 1,000 crores of order inflows. We should be getting total order inflows, which would be in excess of 1,000 crore this year also. Probably closer to the numbers that we saw in the previous year.
Okay, take your point. You know, I was going through your quarter two conference call transcript as well, and there you did mention that some of the orders are facing delays because of delay that you're seeing in signing of larger orders because of approvals coming in late as well. Has that been happening in quarter three as well? Are you seeing more orders coming in from the government?
There have been some delays which we were experiencing, especially in the international market. In the domestic market, we are seeing a relatively improved flow of inquiries and orders. As far as government orders are concerned, we are typically roughly around 20% to 25%. That's the percentage which the government orders contribute.
Do you expect this delay in international orders in decision making and the even the flow of orders to be slow for the next couple of orders on the international side?
It's difficult to predict exactly, but the larger orders, especially from the government sector, which we have been working on for quite some time, those are the ones which tend to stretch out more. We are certainly seeing a little bit of an improvement coming in from certain pockets in the international market. There has been a slight improvement in the Middle East. There has been improvement in the Southeast Asian markets and in the African markets. So there certainly seems to be a slight uptick in the inquiry book. And we are hoping that as we come to the close of the year, the flows from these markets would be better.
Okay, take that point. So I wanted to speak to you about your chemicals business because it is a high margin contributor to the business as well. You are planning a capex here, a greenfield expansion. What is the update here? And 200 to 250 crore rupees, that's what you're putting entirely in this segment, or will it be spread across?
So this greenfield project is to do with resins, which we are planning to have an expansion which will equal the current capacity of the company on this particular product line. The investments there, the project cost would be in excess of 250 crores. And that's entirely for resins. There would be, apart from this, there would be further capex in other lines of the business, which is on the engineering side and in other chemicals facility as well.
So when do you expect, some meaningful contribution from this project to start flowing in? Are all approvals in place? By when will it get commissioned? And what is the initial revenue flow or asset turn that you're expecting here?
We are still expecting environmental clearance to come through for this particular project. There's been some delay beyond our expectations, but we do hope it will come in any time now. Once it comes in, we would take roughly around 1.5 years or so to execute the project. I would expect something around 3 to 4 years for the capacity to be filled up.
So after 1.5 years, once the plant is up and running, but not fully operating at 100% capacity, what could be the expected revenues? What is the forecast that you've done, year 1, year 2, year 3, year 4?
See, it would build up towards 100% capacity utilization over a 4-year period. I would not expect the first year to be very high capacity utilization, but still it should be roughly around 40% to 50% mark. But it's a guess, and we would be probably more in a position to give accurate forecasts once the plant is closer to completion.
Okay, all right. So lastly, on your consumer division segment, is CapEx largely over in that segment? What is the growth opportunity here as well? And when do you expect to break even in this segment?
A consumer segment, there's not much of capex which happens in that particular segment. We are able to, generate revenues which would probably be around 2 times of where we are, without incurring any substantial capital expenditure in that particular segment. As far as break-even is concerned, we expect that by the end of this year, we should be very close to break-even, if not, in the positive.
Just a final, 2023, plans for you. What would be the top 3 things on your agenda? And if you could leave us with your FY23 revenue and margin guidance.
We are looking for a very good growth number by the end of the year. In the last time we met, I think we had given you a forecast of where we expect the growth to be. I would expect that compared to what last year full year numbers, we should be around 30 to 35% higher. And as far as margins are concerned, I expect that to be better than what we reported last year in terms of margin percentages.